It's my pleasure to introduce our luncheon keynote speaker, Mr. Syed Jafry, who is Vice President for the Emerging Markets at Thermo Fisher Scientific. He is originally from Pakistan and has worked in many parts of the emerging world, and now has central responsibility within the firm for increasing their prospects in these markets. If you think back to our conversation from the morning, we started by looking at pieces of the problem. We looked at sourcing, we looked at some possible markets, we looked at possibilities of innovation. Then we started to pull things together in the conversation with Anand Raman, where he looked at the totality of experience of companies in one emerging market. And now we're going to look at the totality of experience of one company in all of the emerging markets. And we're really delighted to have Syed to do this. He's been with Thermo Fisher for several years, and before that had 18 years, I think, with GE. So he's been around the block. And we greatly appreciate your time and sharing of your insights. Syed, thank you.
Well, good afternoon, everybody. Ravi and I have been trying to get together for almost a year now. And I was so and I was so pleased that when we finally found a date and time to come here and share some of my thoughts with you. I was also very pleased because I come from a family of teachers. My father was a teacher, my grandfather was a teacher, two of my siblings are teachers. So, and I grew up on a school campus. So I'm always up for any contribution that I can make towards an educational institution. So it's great to be here. Now, before I share with you my presentation on Thermo Fisher scientific strategy for the Asia Pacific and emerging markets, I want to spend a few minutes just to help you understand what Thermo Fisher does as a company. So Thermo Fisher is a Boston headquartered company. We started in this area about 55 years ago. Our founder, Mr. George Hatsopoulos, was an MIT professor who started the company. And we are now reaching almost $13 billion in revenues, with close to about 40,000 people being part of our organization around the world. And the company is very much focused in the area of what we call analytical instruments and services. We cover a very broad set of industries in terms of the customers who buy and use our products. So the spectrum is extremely broad. So on one part of the spectrum, we have customers such as pharmaceutical companies, academic research institutes who are doing work in the area of drug discovery, for example, or studying disease, for example. So large pharmaceutical companies are customers of Thermo Fisher. On the other end of spectrum, we have products that go into a lot of industrial markets. So, for example, in the United States, almost 70% of the coal-fired power plants, they use our instruments to measure the emissions of carbon dioxide, SO2, for example. So we cover a number of different industries. The company, over the last many years, has been very, very acquisitive. Our recent acquisition that we made just a few months ago, and we're hoping to close that in the first quarter of next year, is a company called Life Technologies. As it stands from the name itself, the Life is very much involved in areas such as genetic testing, next-gen sequencing, for example. So that helps us in basically meeting our mission of the company, which is to enable our customers to make the world a healthier, cleaner, and safer place. And as I go through my presentation, I think you will get a better appreciation of what we mean when we talk about making the world a healthier, cleaner, and safer place. Okay. So What I'll do is I'll spend some time to share with you what we have been doing in the various emerging markets. And what you see on the chart is a representation of our business in emerging markets at this time. So in terms of our revenues, we are doing a little more than $2 billion in these areas. What you don't see on this chart is two regions that I'm also responsible for, and those are Japan and Australia and New Zealand. They're not there because even though they are part of Asia Pacific, we don't look at those as emerging markets. I mean, these are relatively mature markets, and I'll talk a little bit about those as I go through my presentation, right? But you can see on the chart that China is the largest market that we have in terms of the size of our business in China, and then you can see the other areas, India, Brazil, South Korea, Russia. And what I will do is that I will touch on some of these markets in a little more detail. I have specific pages on those. So what has been our strategy in these areas in terms of how we are growing our business? In many parts of the world, when you start doing business, initially you leverage partners. We call them distributors and dealers. But as you start growing your business, you want to control your own destiny. You don't want to be depending on the distributors for a very long time. So we have been investing very heavily in building a direct organization in these areas. So you can see that we have now about 5,600 people who are part of my organization in these areas. We still work with a number of distributors and partners because you can't totally get away from that. Reason being that when you're in countries such as China, very large countries, you cannot just afford to put salespeople in every part of China. So you make your selections in terms of large areas such as Shanghai, Beijing. That is where you have more direct presence. And as you go northwest to Urumqi and the western part, you rely more on partners. But we have been investing heavily in establishing presence in these areas. As we go through this evolution of our business in these countries, we start with the commercial presence, but then over time you start looking into having more manufacturing, having more service capabilities, because what your customers don't like is that if they buy a machine from you, whether they paid $100,000 or $1 million, and if it breaks down, they don't like to hear that somebody from California or somewhere in Germany is going to come in 3 months and fix it, right? So over time, we have been building our service capabilities. Now, as we grow our presence in these areas, the next horizon that we have been focusing on is technology development and product development. So I'll talk a little bit about that when I share with you my thoughts on China. That is where we have started to now do some technology development because we believe that to be successful in these areas, you do need some localization of products, right? But keeping in mind that when you are a global company, you cannot just make products for every single country because they want a slightly different angle. I mean, you just can't justify that from a productivity and efficiency perspective. But then again, there are certain areas where we believe that there are opportunities for us to further modify and tweak our products that may have a better fit for the Chinese market or the Indian market, for example. And the last thing I want to highlight here is that we have been investing very heavily in expanding our footprint, manufacturing footprint around the world. So right now, almost every time we invest in a new manufacturing operation, it is in the emerging markets. And we have close to about 140 operations around the world, but every new operation that we're investing in is very likely to be in the emerging areas. The last point I want to make here is that even though 16% of our company revenues are coming from these regions, but 45% of our growth comes from these regions, right? So the region is a small region, growing very rapidly, but it means a lot to our company's overall growth in the future. Now, this is a bit of an eye chart, and I would not walk through all these milestones. But basically, what I wanted to share with you is that, we have been present in the emerging markets for more than 40 years. We were selling some of our products in China, for example, in the early 70s. 70s and 80s, we depended a lot on partners and distributors to grow our business in this area. And then in the late 80s, early 90s, we started to establish more sales offices, started hiring people who became part of Thermo Fisher Scientific, selling our products. And we built that over about a 10 to 12 year period. And then late 90s, that is when we started to establish more manufacturing presence. And we opened over a period of about 10 years. We opened about 4 factories in China, for example, established operations in Australia, in Korea, for example. And one of our latest manufacturing operation that was just opened in November last year, that was our 5th factory in China. And then along the way, we have been expanding presence in, for example, in India, in Korea, in Brazil. But I'll go into some more details on those countries on the pages later in the presentation. So let me talk a little bit about the market in terms of why we are excited about emerging markets. And what you will notice is that, it's not that our position in every emerging market is just great. I mean, there are tons of challenges that we're also facing in these markets. And especially over the last 4 or 5 years, we have seen some changes in terms of some of the economic slowdown. To use China as an example, where, when I was living in China 5 years ago, China was growing around 12% GDP, right? You look at the forecast for next year, we're looking at about 7, right? So you're almost, cutting down the GDP growth almost by half in a 5-year time frame. And over time, as China gets bigger and bigger, the GDP growth is not going to accelerate. It is going to decelerate, just sheerly from the size of the business perspective, right? So on this page, what I'll do is I'll talk a little bit about Japan and Australia and New Zealand, because the other countries, I'll have some more details later. So Japan, for example, right? Japan is going through some massive change right now. The Prime Minister Abe has made some serious monetary policy changes. He's trying to raise the inflation to about 2%. And the Japanese currency continues to get weaker, right? Which is good for Japan in the sense that they can export more. But for companies like ours, it is a problem. It is a problem because we are selling in Japan products that we are mostly making outside Japan. And as you bring those products to sell in Japan and you have cheap yen, you're not making a lot of money. And based on that, we lost about $32 million last year in profits just because the yen continued to go over this 100 yen mark versus the dollar, for example, right? But one area we like about Japan is that Japan continues to invest in innovation. The Japanese government is investing in R&D, for example. Last year, they introduced a very solid stimulus package. And in Japan, what I see is that when they introduce their stimulus package, it absolutely hits the road. It doesn't get lost in some debate somewhere in the government world. And we see the benefits of actually selling products because they are using that stimulus funding in buying equipment for R&D, for example. Australia and New Zealand, over the last couple of years, things have not been good in Australia and New Zealand. If you look at politically, it has been quite messy. In the last I would say about 12 months, you had almost 3 changes in the government. You had Julia Gillard as their prime minister, who got ousted by Kevin Rudd, and 4 months later, you have a new government now, which is Tony Abbott, which is interestingly a government which is a coalition between conservatives and liberals, which is a bit of an oxymoron. How do you make it work when you have the conservatives and liberals trying to run the government together? And what we have seen in Australia and New Zealand is that, Mining has been the major driver for the economy in Australia, right? But as the Chinese growth is slowing down, that is affecting Australia because China was their biggest customer for all the mined material. But if you look at the non-mining economy in Australia and New Zealand, it is hardly growing. It is somewhere between 0 to 1%, right? And what we see is that the government has made some major cuts in investments in R&D, for example, in healthcare, for example. So our business has suffered. And this is what I was referring to earlier, that the story of Asia Pacific and emerging markets is not just great in every part of the world. It varies depending on where you are. So in terms of our growth, I thought it'll be worth sharing with you some numbers because Mr. Raman, who presented to you before me, I thought had a very interesting discussion relative to growth and profitability. And I thought I'll share this chart with you, and certainly now or later, we'll be more than happy to talk about what it means for us in terms of business growth and profitability. So we grew our business in this region by about 12% in the last, let's say, 12 months or so, right? And over the next 5 years, our goal is to grow the business at a CAGR of about 11%. And one could question why 11, why not 12? And I'll just go back to the point about the sheer size. As the business is getting bigger, to grow that business at the same rate becomes very, very difficult. Actually, one could argue that even this 11% is, a bit of a stretch. It's not that easy, especially when, the economies in some of these countries are going down and our size is getting bigger. But again, this is what we are targeting in terms of the growth that we want to see in our company over the next 5 years in these regions. So I wanted to talk a little bit about the 3 different aspects of our strategy for the regions and the countries that you see on the slide there, right? So 3-pronged strategy. If you look at the left side of the slide, China and India, right? Those are the 2 countries where we have made significant investments. And by that, what I mean is, having a country leader, having functional leaders on that country leader staff, the finance, the supply chain, the operations leader, the HR leader, commercial leaders. So you have basically a full P&L structure that we have in China, and the same thing in India, right? But our country leaders in China and India who are on my staff, they make most of their decisions in the country, and there are certain aspects of the decisions that involve product businesses because we are a global company making products all over the world. So you cannot discount that connection with the product businesses that has to be there. And that is something that, I'll be happy to talk more about it if you wanted to discuss that, because I've lived it. I ran global businesses and I ran countries. So it was a little easier for me to manage that matrix of how do you make, the regions and the global product businesses work together, right? I think Mr. Raman was talking about, for example, you want to make local decisions. Yes, you absolutely want to make local decisions, but you also have to realize that technologies and products, right, they are coming from your operations in Germany, in Massachusetts, in France, right? So how do you make sure that your people in the countries are not working in a vacuum? They need to be aware in terms of what products are being developed, what technologies are being developed, what are the expectations on what type of profits you want to make in those products, right? So making that matrix work is not something that is a science. It's a bit of an art. But as long as you keep in mind that the objective is to grow the business and grow it profitably, and you have the ability and the skills to make these products and the regions work together, you can be successful. And the tagline there is that not only we grow our businesses in China and India, we do make money in these countries in terms of profit. In the middle block are the countries that we would refer to as the Tier 2 countries. So South Korea, Russia, and Brazil. This is where we have been investing more in the commercial resources. We are not looking at these countries as large P&Ls because, again, our goal is that we need to be careful in terms of not putting a lot of cost in these countries, because one model worked in India. That doesn't mean that we need to go and establish exactly the same structure in Russia, for example, right? So our investment in Russia, South Korea, and Brazil has been more on driving the top line growth. We are not doing R&D there. We are not trying to have major service organizations established there. So that's the difference between the left and the middle block in terms of how we approach those countries. And then on the right, you have the regions of Southeast Asia, Eastern Europe, Middle East, and Africa. Huge fragmentation. You know, Africa alone has 51 countries, right? And you have to be very, very selective in terms of where do you start. So in Africa, for example, you know, South Africa is our starting point, where we have an organization. We know there are investments being made in healthcare, for example. So we are investing there. But, you know, are we investing in Kenya, Zimbabwe, and everywhere else? Probably not. Because you have to kind of make sure that, you know, you are pacing yourself in a way that you don't end up being too optimistic and not make any money in some of these emerging areas. So there is a selective approach that we're taking here. And then later I'll talk a little bit about 4 countries in this right block in terms of what we are doing in those countries. So let me talk a little bit about China. China has been absolutely the brightest spot in terms of growth for our company. I commented earlier that 45% of our growth comes from emerging markets in Asia Pacific. More than a third of our growth comes from China. I mean, China is that important. According to the CEO, my boss, there is nothing more important for our company when it comes to markets than China. His message to me is, you can screw up a couple of other countries, but don't screw up China, because we can't afford that, right? So we have been very, very fortunate in China, where for the last 13 quarters in a row, for more than 3 years, we have been delivering over 20% growth in revenues every single quarter, right? And that is a great achievement by our team in those areas in China. What we see in China is that even though there is a slowdown, take cement and steel, for example. These are the materials that we depend on in terms of what we sell into industrial markets, because we sell products that are used for quality control in steel and cement manufacturing operations. So we have seen a significant slowdown in our business in those markets. But when it comes to areas such as academic research, healthcare, for example, where China is building a large number of hospitals, a large number of clinics, and existing hospitals are being modified, that is where we are seeing growth. So industrial business, fine, it is down right now. But in other areas that I just mentioned, we are seeing significant growth opportunities. The other thing is that, in areas like China, you have to be creative in the sense that you cannot just rely on living and working in Shanghai and Beijing, but you have to think about the tier 2 cities and the tier 3 cities as you start going toward the central part and the western part. The areas like Chengdu, Wuhan, for example, that is where new investments are being made. And we are making sure that we are putting resources in those areas as we see more investments from the government and the private sector being made in that area. Very quickly, this just shows you over time, as I said earlier, that how we have established our manufacturing capabilities in China. So this just shows you that since 2000, what we have done there. There were 2 points I wanted to make here. One is that as we started to establish these manufacturing operations in China, the goal used to be that this is a low-cost region, and we are going to supply the world from there, right? And that is still the case. We still supply, some great products that are made in China, and in many cases, those products have actually better quality than products we make in the developed world, right? So we make great products, export it to the world. But moving forward, our strategy is to start looking at China more as a marketplace versus just a source of manufacturing, right? So two reasons. One, manufacturing in China is not as cheap as it used to be, just 5 years ago or 10 years ago, right? So it is getting more expensive. And for our type of products and technologies, which are not very labor-intensive products, I mean, we are not making Nike shoes or Nokia phones. We are making machines that are very capital-intensive, right? So the labor is a small part of that. So our philosophy is changing. We are now looking more at China as a market where we want to sell more products. But at the same time, there are some products that we refer to as consumables. A lot of plastic products that go into laboratories, for example. In the past, we used to ship those from New York and European manufacturing operations into China. We realized we can't afford to do that. So the factory that I talked about earlier, the fifth factory we opened, that is, among other things, that is making a lot of consumer products so that we can actually respond to our customers' needs quickly by supplying those products in days versus weeks because it is coming on a ship from upstate New York. I commented earlier about our company's mission of enabling our customers to make the world a healthier, cleaner, and safer place. And I'm trying to link our mission and what we see as opportunities in China, right? So the healthier aspect of our mission, very much connected with the investments they are making in the healthcare area. As I said, that our healthcare business in China is growing over 30% a year because of the opportunities we have in diagnostic labs, for example. I'll give you one example. We are the largest producer of products and technologies that are used for allergy detection, right? So when you go to an allergist, it is very likely that they are using a Thermo Fisher product, right? So in China, as the middle class is growing, as people are getting richer, and when you get richer, you do worry a little more about your health than you're poor. And you can clearly see the trend that, 20 years ago, probably nobody cared about what allergy they had because they couldn't figure out what allergy they had. But now, because there is technology available, you see Chinese as interested in learning about their allergies as people in the United States, for example. And then if you look at the investments being made in the pharmaceutical industry, there are massive investments being made. I mean, if you're in Shanghai, the Zhangjiang Park is the place where GSK, Pfizer, Merck, all of these companies are establishing their R&D centers because they know that the healthcare market there is going to be gigantic, and they want to be doing research on the potential diseases that are linked to countries such as China versus just bringing the medicines into the country that were just generic medicines, for example. The cleaner aspect of our mission, I'll just go back to the comment that I made that we supply instruments that are used for air monitoring. China has actually almost as many coal-fired power plants as the United States, right? And we work with them very closely in terms of providing instruments for air monitoring. The challenge in China is, and it is getting better, but the challenge is that it is not that they don't have regulations to make sure that the operations are not producing a lot of contamination in the air. They have regulations, but the question is how well they are reinforced. I think that is where the corners are cut. Having said that, I'm very optimistic about the future in China because, if you look at the new government of President Xi Jinping, I've never seen the type of changes that they are making in terms of, coming down on corruption. I mean, I was having dinner on, I think it was Thursday or Wednesday last night in Shanghai. And I asked the person I was having dinner with, I said, how come the restaurant seemed empty? He said, recently, because of all these anti-corruption fears and the government actually clamping down on the government officials, that a lot of these government officials used to come to these restaurants because somebody was, feeding them all these nice dinners, and they are afraid to do that because they literally have, police come into restaurants, for example, to check on who they are and who's paying for the dinner. I mean, it was unbelievable. That is the level of clampdown is taking place. In hospitals, for example, right? I mean, you heard about the GSK sort of a scandal in the papers recently where one of their employees being charged for paying bribes to some government officials, right? Since then, what is happening is that in large hospitals in China, you have actually cops sitting outside the hospitals, making sure that when the salespeople are coming in, they are not coming with bags of things that they want to give to the purchasing people, right? So again, I mean, what I want to share with you is that things are changing, right? I mean, corruption is getting less, but again, it is one of those things that keeps us worried. That is the number one worry that we have when we do business, whether it is in China or India or Brazil, and that is us ever getting our company's name in the newspaper linked to some bribery or winning business, through the back door, right? And I know that, earlier we were having the discussion around how do you manage your business in these countries with all the corruption and everything. And again, don't look at this as corporate speak, but in our company, one of the values that we have is integrity. And that is no matter where in the world we do business, we have exactly the same standards of integrity. We don't want any business in China or in India if it is not being won fairly. And we believe that is the only way to do business. And the fact is that, you can win business by going below board and going through back doors. But if you get caught, the cost is so enormous in terms of what you lose in the shareholder value that you absolutely can't justify winning short term and then later worrying about your reputation of the company. And the last point here, from the safety perspective, one area where there are a lot of investments being made in China is food safety. I mean, them being one of the largest producer of processed food, food safety is becoming critical. We are all familiar with scandals a couple of years back when we heard about the melamine being used in milk, and tons of issues coming from that. A lot of kids dying from that. And once that scandal was discovered, basically in China they hanged. I mean, there were like 10-day trials, and the people responsible were just hanged. I mean, there was no debate around how long the sentence has to be. So food safety is one area that we are involved in the sense that our technologies are used for detection of contamination in food. I mentioned last week when I was in China, we were actually at the opening of a food safety lab at a very large Chinese company that actually is the largest employer of people in China. They employ about 1.2 million people. And the manufacturing operation we were at, that had 300,000 people, right? So right next to their manufacturing operation, they have a food factory, right? And they were telling me something like, they would cook about 12 tons of rice every single day because they have to feed 300,000 people. And they have now a lab right at the food manufacturing operation to make sure that it's not contaminated in any way. So here, in terms of just the key aspects of our strategy in China, it is very much linked to the China government's 5-year plan. And if you look at the right side of the slide, you can see the key elements of the plan. Heavy investments being made in healthcare, as I said. Urbanization is important for China. I mean, every year they have to find a home in the urban area for more than 20 million people. And that goes back to my comment, the expansion in the Tier 2 and Tier 1 cities. And then you can see other areas where innovation is becoming important. Chinese, they are kind of going in a direction where they don't want to be only the factory of the world, but they also want to innovate. So there is a huge focus and investment in their 5-year plan that is being made on innovating new products and technologies in China. While in China, I meet some very, very bright people. PhDs returning from MIT or Harvard, for example, because the country is creating incentives for a lot of their talent to come back to China, which is somewhat similar to India as well, where a lot of very talented people are going back there because they are seeing incentives. They are seeing that they can actually have still a pretty decent life financially and be a part of their own culture and innovate and contribute towards their countries. And I see that as a big trend in terms of a lot of technologists of Chinese descent going back from the United States and Europe and working in China. So this just shows you in terms of how we are performing in China. In 2012, you can see our revenues were about $735 million. And our 5-year plan is to get to about $1.5 billion in the next 5 years. And you can see on the left some of the key markets where we are seeing this growth coming from. India. India has been an interesting one. I've had a lot of discussions with our CEO in India. And I believe that India has tremendous long-term potential. When you look at some of the macro aspects of economy, I believe that, when you have over 400,000 engineers graduating from universities, you have a culture that knows how to deal with the West. Language is not an issue. Every educated Indian is able to speak and converse in English. If you look at some of the Indian companies who actually have been very successful globally, far more successful than Chinese actually. I think in China, the only example I can think of is Huawei in the telecommunication that has been somewhat successful globally. But in India, you look at Tata's, you look at Reliance, Mittal Steel, even though the gentleman who's the CEO, he's a resident of UK, but he's an Indian who built the largest, steel manufacturing company in the world. So I believe that India has tremendous potential, right? The challenge in India right now is that, again, I'm not an economist, but if you look at some of the monetary policies, they have been behind some of the downfall that we have seen. Recently with the appointment of Raghuraman, who is the president and the governor of the Reserve Bank of India, I think finally, at least my view, there is somebody who is taking some risks in terms of raising interest rates, which is already affecting the value of rupee. Which had hit the all-time low just about 4 weeks ago. So monetary policies, one area. Second thing, infrastructure. There is plenty of opportunity in India to improve the infrastructure to create that attraction for the Western companies to come and feel like they do in China, where the roads, at least in the big cities, are as good as what we drive over here, right? So infrastructure is a second challenge. The third one is bureaucracy. I grew up in that part of the world, even though I was born in Pakistan, but my entire family came from India. And when it comes to the bureaucracy, they are both equally bad. There is no difference. So that's the other area. And the last thing I want to make a point on is the foreign investments, right? A lot of companies, for example, pharmaceutical companies, were very bullish about investing in India, right? Because they saw the talent. They knew that the market opportunity is huge, right? But in the last couple of years, a number of these pharma companies started to go to China because they got tired of, just not being able to invest the way they wanted to, right? Too many regulations, too many barriers for them to invest. And when the foreign investments start leaving the country, that is where the trouble starts, right? But I think that, early next year, hopefully, the elections that are taking place in India Uh, Depending on who comes in to lead the country, there are some people who are in the elections who are actually very good business leaders, that if they become the ruling party, I believe that India could turn around. But we feel that 2014 would still be a challenge, just like 13 and 12 have been in terms of generating business in India. Very briefly on South Korea. South Korea has been a very good geography for us in terms of the opportunities we have seen. There are a number of investments being made in biotechnology, in pharmaceuticals. The South Korean government is very, very progressive in making sure that they are allocating large amounts of sums for R&D, for example. Education, as I'm sure you know, is a big part of Korean society. And wherever you have societies that are investing in education and technology and innovation, that normally means it is good for us, because that is where we are able to sell our products. About 2 years ago, I put in a country leader to run Korea for us, because we felt that Korea was becoming big enough that now we need to treat it more locally. And so we built more leadership in the country. And when we are trying to sell our products in a country, especially when we start going to the higher end of instruments that are sold for $500,000 or $1 million, you need what we call a demo center, application labs, where you actually bring the customers and you actually work with them in showing them technologies you have and how you use them. So we established that capability in Korea, and it has been paying off for us, as you can see in the way we are growing. And our goal is that Korea could become close to about $250 million business for us in the next about 5 years. Okay. Russia has been a fascinating market for us. Actually, Russia, even though it's a smaller business for us than in China, but when you look at the growth rates, Russia has been growing actually even faster than China. I mean, this year, in the first half of this year, our Russian business is up over 30%. And what are some of the key drivers? Healthcare is one area. Again, going back to my point about China, that when people are getting wealthier, they worry about their health a little more. Russia also recently introduced some regulations that require a lot of these pharmaceutical companies to actually manufacture some of the drugs in the country, right? So what that is doing is that some of the large companies such as Pfizer, Lilly, they are beginning to establish manufacturing operations there. And as I said earlier, we work very closely with the top pharma companies in the world, and we are leveraging our relationships with them and also helping them with their expansion in Russia. So pharma is one area of growth for us in Russia. The other areas where Russia is doing well are areas such as oil and gas, mining. Russia still has a lot of influence in the areas such as Kazakhstan, Belarus, Ukraine, and Kazakhstan is one of the largest countries in the world in terms of mining of gold and other types of precious metals, and those are the types of industries where we also have a lot of involvement with our products and technologies. So Russia is definitely one of our top 10 emerging markets. And then Brazil. If you have a chance, there's a book by Fareed Zakaria. I think it's called The Post-America World. It's a great book. And in that book, he talks a little bit about Brazil. And basically he says that there are a lot of similarities between Brazil and India, right? Even though they are on almost the opposite ends. Similarities being Brazil is also very bureaucratic. Brazilian currency also took a dive. Real is right now trading for about, I think, 2.2 to $1. So there's a similarity. Brazilians, just like Indians, love to stay up late at night going for big dinners, unlike the Germans and maybe the English, who may not go for that late evening adventures. And they have the love of food, right? So there are a lot of similarities that we see between Brazil and India. And interestingly, our business in Brazil has been doing the same as our business in India, where it hasn't been really growing as much as we would like to. And a couple of reasons. One, I think that the Brazilians did make some mistakes in terms of their tariffs and taxes on imports, that they became a little too arrogant in terms of heavy taxes on importation. And when you import products into Brazil, it is amazing how long it takes to get your products through. So the bureaucracy started to affect the business. They started to put some regulations in place that if you want to sell in Brazil, you have to make it in Brazil. Well, guess what? I mean, nobody can justify making everything in Brazil if the market is not big enough, right? So some of the companies started to pull back. Having said that, I think that President Rousseff is making some decisions that are beginning to help the economy a little bit. They recently decided to introduce more than $180 billion of stimulus into the economy over the next 5 years. I think that is beginning to help. They are beginning to offer some more attractive terms to pharmaceutical companies who are very interested in the Brazilian healthcare market. And then, as symbolic as it is, but the future, soccer World Cup and the Olympics, that has an impact on the country in terms of more investments in infrastructure. So our view on Brazil is somewhat similar to India, and that is that we are staying put. We are not giving up on Brazil, but we do think that it will be, probably another year or so before we start seeing, Brazil going back to the economic growth as they were experiencing before. Nobody thought that, Brazil will be growing 1%, right? That is below the U.S. And this was one of the BRIC countries. We think that some of the fundamentals are changing, and we could see some, better days ahead of us. Okay. So in terms of, the remaining emerging markets, obviously, in the interest of time, we can't talk about everything, but these are the 4 areas that, where we see expanding our business more in the future. Malaysia, for example, Johns Hopkins, right? They are working with the Malaysian government in terms of establishing, research labs in some of the universities in Malaysia, right? And we are working with those universities in being a supplier of lab products, for example. We see government investing more in healthcare in Malaysia than any of the other Southeast Asian countries. Vietnam, not a huge market for us, right? From a manufacturing perspective, some of the consumer product companies are going into Vietnam. But what we're seeing is that there are some investments being made in Vietnam in the steel manufacturing and chemicals manufacturing. So Formosa Steel, one of the large Taiwanese conglomerate, they are right now building the world's largest steel manufacturing operation in Vietnam. They're investing about $16 billion, right? And Vietnamese won that over Chinese because Formosa, being Taiwanese, was looking for any alternative they could have than going to mainland China. And Vietnam offered them incredible terms in terms of the tax savings, et cetera. So they went to Vietnam, and following that steel manufacturing operation, they want to build a huge chemical operation right next to the steel manufacturing, right? So those are the type of industries that we believe that there will be opportunities in Vietnam. And Turkey is, I think, quite happy that they did not join the Eurozone too early. They are enjoying a good 4 or 5% GDP growth. I was there, a couple of months ago, and despite the fact that there was a political issue at that time, looks like that is behind us. But in Turkey, I was amazed to see the Turkish companies involved in building large hospitals, not just in Turkey, but again in the surrounding areas of Turkmenistan, Uzbekistan, for example. I mean, Turkey basically controls a lot of business in those surrounding countries. So Turkey is another area where we see opportunities in healthcare, and also a number of pharmaceutical companies are also going into Turkey because again, going back to the point I made earlier, that society is getting richer and they are caring more about their health. And pharma companies who are our customers, they see that as a big opportunity. Okay. So here's the last slide, just to wrap up. I feel very proud working for Thermo Fisher, and in the last 5 years, having been associated with the emerging markets. And call me fortunate or lucky, but the last 5 years for us have been absolutely outstanding. And it's not because what I've been doing, is the 5,600 people that we have in these areas who have done a great job in building a very strong momentum for our company in these countries. And I'll go back to the point that Mr. Raman was making about local leadership, right? One of the reasons we have been successful is that we still have some expats who are running China and ANZ and Japan for us. But we are heading more and more in the direction of finding local talent. So I was the first president for the emerging markets who actually put an Indian to run India. And there was a lot of skepticism. That, do we really want to do that? I mean, we have always run it from UK or Netherlands. And I felt very confident about the person who we put in place. He spent 18 years with ICI as their regional leader. And he's doing a great job for us. Even the circumstances in India are tough, but he's doing an outstanding job given the hand that he has been dealt. And our goal is to continue to grow more and more of the local leadership talent in these countries. In China, for example, I know that the current president, when we bring him back, the next one would still be a foreigner. But the one after that, probably will be a Chinese. So that's very important for us to make sure that we continue to build that local leadership. And our goal is to, maintain that 45 to 50% type contribution towards our company's growth, because that is certainly not coming from the developed world. And we want to make sure that emerging markets continue to make that contribution. Okay.
Thank you.
Thank you.
In the back.
Thank you for the presentation, Syed. Very enlightening. My name is Phil with EMC Corporation. Just a question regarding your manufacturing footprint and how Thermo Fisher is addressing issues around intellectual property protection, and any general guidance that you can offer us in terms of the approaches, especially not as you look into the emerging markets beyond,
Sure.
Obviously, India and China, Malaysia, Vietnam, Indonesia, et cetera.
Sure.
Thank you.
Okay. Yeah, that's a great question. The IP is a huge concern for us, and we think about it a lot. So if we look at China, where we are manufacturing in 5 operations, a large number of these products are what we call the mid-level or lower-level technologies, where our technologists feel confident that just because it is being manufactured there, and you have a lot of turnover of employees there because of the job market, that employees don't walk away with all the science behind the product. So we intentionally watch that very carefully in terms of the type of products we are making there. In the future, when we are thinking about some of our higher-end technologies, mass spectrometry, for example, is the higher-end technology for us. For that, our goal is to look into countries where we are absolutely confident that we won't have any loss of IP, and we're looking at areas like Singapore, for example. And again, as I said earlier, I think that the IP laws in China are getting stricter. As a matter of fact, a close friend of mine, he's one of the top IP lawyers in China. He studied law at Harvard. And I was having just a meal with him somewhere. And he said, you wouldn't believe that in China today, right? There are more Chinese companies suing the other Chinese companies for IP infringement than the foreigners suing the Chinese, right? So when it becomes their local problem, they are trying to find ways to deal with that, right? But it is something that, we deal with that very carefully. And as I said, higher end technologies, we are looking at Singapore. The ones where we are confident that, somebody walks out, they would not be walking away with the technology, we are keeping that in China.
A very nice presentation. I just had a question in regards to your company. Come over here. Your company, in terms of focusing on certain countries because they're investing a lot into healthcare, and you also said in terms of the growth of the pharma. So can you also address in terms, one of the biggest things in terms of the life science industry is regulatory and, of course, reimbursement. Mm-hmm. So could you also address that in terms of the countries that you were picking?
Sure. So, reimbursement is very important for us because when you look at the healthcare systems in areas such as Japan, right? I gave you the example of allergy testing, right? In Japan, if you are tested for allergies, you as a patient, are able to get the reimbursement because you're insured, just like in the US, for example. In countries such as Korea, they are somewhere in the middle. They will reimburse you for X number of allergens, but not for everything, right? So that means that they are making progress. In countries such as China and India, there isn't really a lot of reimbursement for some of the medical expenses, and we look at that as an opportunity. That over time, I think that we will see more insurance. We'll see more government involvement in terms of providing for the healthcare. One country, which is a developing country, but I think at least based on what I've seen, they have very good health insurance and the reimbursement policies, is actually Brazil, and that is one of the reasons why hiring somebody in Brazil is so expensive. On my entire staff, the most expensive guy is who runs Brazil for me, because when we sent him there, he's a German, right? And the amount of taxes we have to pay for him are unbelievable. Not even in Germany we pay that many taxes, because socially in Brazil, the employees are covered so well. And so healthcare reimbursements are, very much in the favor of the employees in Brazil. Regulatory in what sense? So I'll give you China's example, right? China, over the last about 2 years, has really clamped down on regulatory approvals, requirements, right? I'll give one example that, there were products that we were selling in China for many, many years that we cannot sell anymore, because now they're saying that, they have to be certified by, organizations such as SFDA or CFDA. So we are seeing in China increasing focus, especially in the healthcare and the pharmaceutical area, having very, very good regulations being introduced. And not just being introduced, but they are being enforced, right? There is some bias towards local companies versus the foreign companies that we try to address through the relationships that we have with the Chinese government in terms of making our case together with many other American and the European companies. But overall, we see more regulations in China. Areas like India, probably not there yet, but I think the trends are that we'll see more regulations. And we watch regulations very carefully, because more regulations mean more business for us, because we are providing instruments that are helping meet those regulatory requirements. So those are the couple of examples that I could share with you.
I'm afraid our time is up. It's been a long day, and folks probably have other commitments. So, Syed, thank you so much for sharing all your insights with us.
Thank you. Thank you very much.